Good afternoon. This is Brian Shannon from Alpha Trends Blogspot. It is Monday, April 30th, 2007, and the market's closed. We did see some selling today for the first time in quite a few days. So we had the first real little pullback from this rally. The S&P 500 spiders lost $1.27, or about 0.85%, but no damage done to this uptrend at all. You can see that it pulled back right to the rising 10-day moving average. We've already seen a test of this 10-day moving average, so it's possible that this might be the beginning of a deeper pullback that might find some support along the rising 20-day moving average, and that might be about where I put this line right here, because that 20-day moving average is going to advance as well if the market keeps continuing to pull back. And that would also give us, generally this high back from February too to look at as far as potential support in that area near the 146.5 to 147 levelers. So, but the market was extended. It got a little overdone on the upside. We do still have a rising 5-day moving average. So, and the market came right down to that level. So you can see that there hasn't really been severe damage done at all, and very little damage done, in fact. But we can see that the longer-term trend line has been broken here. When I say the longer-term trend line on the intraday time frame, you can see it was touched on about April 12th, April 24th, again the 26th. And look how the frequency of those tests become greater and greater, and as far as time goes on. And that's typically when you can tell that a trend line might break. Now, a trend line break doesn't always mean reversal. It means that the easy gains are probably over. But when we took that support out at 149, that was the level that I'd set on Friday, that if we see the break of 149, then perhaps it could be a little bit more meaningful pullback. So right now we have to be very much on the defensive, because the sellers have clearly taken control of the short-term trend. We do still have this rising 5-day moving average, but we want to be very cautious in here because it's possible that we could see a pullback 147.5, 146.5. Those just look like a couple of the levels where there's the potential for support, as well as that 146.5 to 147 area that I had laid out on the daily time frame. So looking at the NASDAQ 100, we saw some profit taking in there as well. The Qs lost 61 cents, or 1.3%. Looking at the trend line here on this intraday time frame, and you might look at it and go, well, why is he, why am I drawing it through the tails of these candles? And basically, the way you draw a trend line, there's a lot of textbooks out there that tell you how to do it, but there's no perfect way to draw a trend line. A trend line, I think it was Larry McMillan that said it, where I heard it once, is a trend line should be drawn with a crayon, not with a straight edge. So it's going to be in a general area. And another saying is that, well, you know what, I forgot what that other saying was. Something about trend lines. Anyways, it should be drawn with a crayon, not with a straight edge necessarily. And it's meant to capture the essence of the trend. So it doesn't have to hit exactly on each point. That's being a little too anal in your analytics. I think, though, that it looks like it's coming down towards that level. We've also got the potential for some support at this prior resistance level of about 45.60 or so. So maybe not the worst behind us yet. And like I said on Friday, below $46.30, that's where we would want to get defensive. So you can see when it did make that lower low at 46.30, that's when it did in fact become time to become defensive. And I said that basically don't be surprised to see it pull back further to maybe about 45.60 after it did break that level. So we do have a rising 5-day moving average. Still want to be cautious, but price, that 5-day moving average is led by price. So it's always going to be a lagging indicator. There are no leading indicators. Price is the only thing that leads. And what we see here is that price is clearly in a downtrend here late in the day. So until that market recovers and we have a little bit more stabilization, I'd say take it easy over the next couple days. The semiconductors are continuing their pullback, so that's a good thing to see. What I was hoping for was a pullback maybe towards $36. And that's still a possibility, but I thought it was more realistic that maybe we see a pullback to $36.50. You don't want to buy it on the pullback. What we want to do is we want to look at that short-term trend and say the short-term trend is still lower here. Again, we do have a rising 5-day moving average, so we want to give the benefit of the doubt to the buyers. But lower highs and lower lows, if you're buying because of a 5-day moving average, that doesn't make sense here. We want evidence that the buyers are back in control. And for now, I'm going to say that would take a move back above $37 a share for the buyers to retake control. But I don't think that'll happen tomorrow. I'd say probably Wednesday or Thursday this week is when we would probably have the possibility of any such reversal of the short-term trend in there. The IWM, this was the one, I've got this trend line on here. I don't know if I left this on here from Friday, but this is the one market that I thought was giving us the most reason for concern, and it lost the most today in terms of percentage. It lost 2.1%, dropping $1.73. If we look at the daily time frame, one thing that's kind of troubling a little bit, or reason for a little bit of concern, is that it did break back down below that 81 level that we've been watching. That 81 level was pretty strong as far as resistance over the last month and a half, and it did hold a support right here about 2 weeks ago, but now we've broken down through that. That's got to raise our level of alertness, basically, more than anything. Doesn't mean run out and sell everything, but clearly this trend line that I had you watching on Friday, the break of that trend line did lead to a very nice sell-off in the Russell 2000. And again, how do you draw the trend line? Just to capture the essence of the trend. Was the trend line broken here, or was it broken over here if you touch on that little that low that day? I prefer to look at it as where does it hit the most times, because that's really what is meant by capturing the essence of the trend. So we've got it below 81, which is a little bit of reason for concern in the IWM, but it could quickly recover here too. This might be a little fake out. We'll see tomorrow. We'll have a better idea. But I think that still be prepared that there's a possibility we could head back down towards 80 as well. You can see that was some resistance late in March, and then early April we had some support in the Russell 2000 near that $80 level as well. Overall, though, looking at the daily time frame, no damage done to this uptrend. We've still got the 10, 20, and 50-day moving average advancing, and the 10 is above the 20, which is above the 50. They are lagging indicators, but it takes time to move them lower, and that's typically not how markets reverse. It is a little bit of reason also for concern that the market broke out on Friday, or rather last Thursday, and failed to hold those gains, and then the trend line break came. So from failed moves often come fast moves. Today you could look at this as clearly that's a fast move. People were exiting the IWM pretty quickly, trying to lock in those gains, and let's just be a little bit cautious here until we see that the buyers have regained control. Right now, it's basically up for grabs in the short-term trend. I'm not going to say that that I'm going to look for a reversal tomorrow. It could continue lower. Who knows? But generally, I would probably expect a little bit of stabilization, and hopefully the market can get back up above that $81 level as well. ACUS, we were looking to buy this stock today at 401. Should have bought it early on. Our stop was then going to be at 388. Let's raise that up to 390 in ACUS. DCEL, we had gotten involved here at $9.30 a share. I said put your stop at $9.10, and that was stopped out late in the day for a 20-cent loss. ISIS was also stopped out with a loss. We got involved in that one at $10.30 a share, and our stop was then going to be at 10.09, so we lost 21 cents in ISIS. And the other stock we were looking at was this Vion Pharmaceutical. We're looking to buy this stock above $2 a share. It obviously never traded above $2, so no reason to get involved in that one.